Many of you already know me, and you might be sick of this page, but I'll just mix it up a little bit for those of you who don't know me. I started out as a CPA, and I had a moment today that I was thinking back to why one of the reasons why I became a social worker and went back to graduate school was because I was watching social workers lose management jobs, especially in nonprofit organizations, to MBA students because they did not know about the importance of budgets and finances and why that's really important in having a nonprofit that thrives. And my career has really taken on lots of different paths, but I am so excited that I am now in this season of working with so many of you, so many therapists in their private practices. And now my focus is really training on how to make your private practice thrive. I am in the unique position that I am realizing the dream. I have my own counseling practice. And so I am doing exactly what you are doing in terms of owning my own business and my own private practice. And I know what it's like to suffer from a lot of the different things that we have to go through, a lot of the hoops that we have to go through. So hopefully I'm going to be able to present some information today about how to really have a thriving private practice that is in it for the long term. We want you to be able to have this as serving the people that you want to serve. And what we're really going to focus today is how on your personal finances, how having your private practice pretty independent, and how we can do some things in our personal finances to not strap our private practices. All right, so with that, the best case scenario, so if you were just starting out your business right now, the best is to grow it organically, meaning to not create a lot of pressure for your private practice to meet personal finance numbers. So for your budget, for your personal finance. So the best case scenario is for your business, your private practice, to grow it without the financial pressure from the very beginning to meet certain numbers in your personal budget. You're going to make different business decisions the more your personal finances depend on your private practice. Those different business decisions are not always better. You're going to maybe accept clients that are outside of your expertise or that you don't really want to focus on because you want to be bringing in more income. Now, there are certainly scenarios where you are going to take on more work. Of course, I want you to be thriving in your practice, but I don't want your business decisions to be based on how much money you're dependent on with your personal budget. So we are independent contractors when we own our own business. So as an independent contractor in your private practice, how independent do you actually feel? So let's really work today on learning how to not strap down your private practice. Okay, so I'm just going to kind of do a little bit of budgeting 101. And this is the basics for both your business and for your personal budget. So whatever your spreadsheet program is that you usually gravitate towards, I use Excel, but in your choice of whatever program you like, create two columns. So you're going to create one column that has your irregular expenses. So the ones that aren't monthly. So maybe like your continuing education, your licensure, your malpractice insurance. Those are all expenses in your private practice that are not billed monthly usually. And your other column will be your monthly expenses. Then on the rows, you want to create categories in your rows. And for the business side, you want to have three main categories, which is first your savings. That's both savings for taxes and retirement, but also to retain an amount in your business, in your private practice. You don't want to transfer everything out of your private practice. So savings, then fixed costs, and then discretionary costs. When we start talking about getting creative with our budgets, the discretionary costs are the ones that have some wiggle room that we can start evaluating whether or not we need those expenses or not. And I'm going to give you some examples with that. So same thing applies with your budget for your personal. You want to have categories for your savings, for your living expenses, and then your discretionary spending. So total those columns. If for your irregular expenses, you're going to get a total, divide that figure by 12, and then add that to your monthly figure for your monthly expenses. I have an example here. I do two examples. One is if you have, this is a business budget, really simple, but you know what? Our private practices pretty much don't have a ton of moving parts. We're not selling inventory. It's really pretty basic as a service in terms of our expenses are pretty straightforward. But this is if you have rent, outside rent that you pay. So that I just use the example of business budget with $500 rent. So as you can see here, this is our irregular expenses. These are our monthly expenses, our fixed costs. I have the savings up at top because I really want you to make sure you're thinking about first savings and then the rest of your expenses and your owner's draw by paying yourself. But I do the calculations down here for the savings. So we have some of our fixed costs. It's not that think that insurance or QuickBooks is usually that's a good price right now. Business license, I just kind of guessed on many things, and it doesn't represent real numbers, but the categories are pretty real because it's pretty simple of what we have. So I just went through and said, okay, usually your insurance, let's just say you were paying $400 for the year, and we're going to put that in irregular expenses. As you can see here, with the $500 monthly rent, we've got irregular expenses that total $1,950 for the year. If we divide that by 12, if we are going to put aside money to have available for these irregular expenses, each month we should put about $163 towards our monthly expenses to save for these irregular expenses. So if you add all that together, we have total expenses monthly of $982.50. Now that seems very, very high to me for monthly expenses in a private practice. But again, this is with $500 rent. So I then created, because we're going to talk about how much I want you saving for taxes, retirement, and to retain in your business. But this is assuming, let's just say that you bring in $2,000 of monthly income. That's not net income. This is monthly income. So let's just say you were counseling in your private practice and you brought in $2,000. You're going to take $2,000 minus your monthly expenses of $982.50, and you're going to take 40% of that. So $2,000 minus your monthly business expenses is your net income. And I want you saving 40% of your net income for taxes and retirement. I want you saving 20% of that net income for those rainy days within, like if you have seasonal income, if your income is inconsistent, and I got that question a lot for this webinar today. We want you to keep money in your business, in your savings account, business savings, so that you have money for those irregular months. I also did the numbers for if you brought in $3,000 of net income, so how much you would be saving there. So as you can see, if you bring in $2,000 of net income, $2,000 of gross income minus your monthly expenses and minus your savings, you would have a net figure of $407 for your personal budget. Okay, again, if you were making $3,000 of gross income minus your expenses and savings, you would have $807. Again, this is all with $500 rent. So the next slide shows you that these are the numbers without the rent. So the monthly cost would be $483. I think that's, yeah, $483. So as you can see, even though we took out $500, we don't have a full $500 here for being able to use as owner's draw, because we're also increasing how much we're putting aside for taxes, retirement, and that retained earnings. So we're saving $200 for personal, and we're saving $300 for savings. So this is a budget, right? This is what we hope that we're spending each month. But all of this is important to have as a guide. But what's really important are the actual numbers that you're bringing in. So you want to make sure that these columns keep going out and out each month, that you're actually keeping track of what your monthly expenses are. So SimplePractice handles, if you're a SimplePractice customer, it handles all of your income, or hopefully it handles all of your income that is coming into your business checking account. But I find that most people, especially those who don't have any kind of formal QuickBooks, yes, or any formal accounting system, are not keeping track of their expenses. So I want you keeping track of your expenses, because that is going to let you know how much you do have available for your personal budget. All right, so it is really important that you keep track of these actual numbers. All right, I just want to kind of go over in theory what we really want to make sure is happening in your private practice, because so often, especially when you are depending on your personal budget for a high income salary from your private practice, I want to make sure you really are keeping your private practice true to your mission. So let's just have you keep reviewing. What is the ultimate dream of your private practice? Who do you want to be serving, and why do you want to be serving that population? How do you eventually want to tell the story of your practice? Many times when I meet individually with therapists, my first question to them is, what is the grand dream? Because I want to know, are you planning on having a group practice eventually? Are you wanting to have employees eventually? That really helps me to determine what kind of retirement plan you want to have, what's best for you, and a lot of financial decisions for the long-term dream. All right, so just make sure that you're keeping this front and center, because when we have a lot of pressure in our personal financial budget for our private practice, we can sometimes lose track of this. Okay, this is called the 50-30-20 rule. And as you can see, this is a guideline for managing your personal expenses. So the best plan is to have 50% of your income going towards living expenses, 20% towards savings, 30% towards discretionary spending. But as you can see here, there is nothing in here about debt. So debt is the one thing that we really have to consider on how much personal debt you have. Hopefully you don't have any business debt with your private practice, but if you have, how much personal debt you have. There are a lot of different systems for trying to get out of debt, but in my opinion, Dave Ramsey, who I think of as the master of helping millions of people get out of debt and have a real plan for financial success personally. Consider Dave Ramsey's debt reduction plan. He also has something called Financial Peace University, which I very much recommend. But his plan, just really simply, is called the snowball effect, where he has you list your debt from lowest to highest. Many finance people will say, no, don't do that. List it from the lowest interest rate to the highest interest rate. Or actually the highest interest rate to the lowest, and tackle the highest interest rate first. But that's not what Dave says. Dave says, put your lowest, let's just say you had a credit card for $500. That's your lowest debt. You put that at the top of the Excel spreadsheet, and you have your highest debt, maybe student loans at the bottom. You want to be feeling some success. So it's a snowball effect because you're paying the monthly minimum that you have to on every single item of your debt. However, you're really attacking the lowest debt first because we want you to see success. So when you get to wipe off that $500 credit card, you start to feel more empowered to be able to having more of a plan to tackling your debt. So I really would recommend looking at Financial Peace University, but like if you just do the snowball effect of listing your debt, you're way ahead of the game. Okay, so you do need some kind of system for being able to track your personal expenses. QuickBooks is a system for your business, but and it's not geared for personal finances, but Quicken is. So I don't know. Many people in my extended family give me a hard time because I love Quicken, and they're like, "Oh, it's so antiquated," but who cares? It really works. So I don't know. I'm biased because I've been using it for over 30 years, but I really do love Quicken, and they have really updated their online presence. So now you can do things more mobilely with apps and stuff with Quicken, but you need some kind of system to be able to know your numbers on where you're spending your money and if your personal spending is matching with your values. Okay, so I love any kind of system. Whatever works for you is fine, but as long as you can create graphs or pie charts to be able to see percentages of where your money is going. So, me, if you've heard any of my talks, you know that I'm a really big believer in tracking everything. Now, you can hear my bias with Dave Ramsey, but he has an app called Every Dollar, and it's a free app that you can use the entire time for free. But the only time you have to pay for it is when you want to bring have your bank accounts tracked within Every Dollar. So if you connect your bank accounts, then there is an annual fee. But you can use Every Dollar or any of the other apps. But what I like to do is, even if you don't want to use Every Dollar for all of your accounts, let's start tracking the categories that you do have some control over. I highly recommend using Every Dollar for just a few of the categories that you want to have current numbers. So for the one that I really harp on is, how much are you spending on food? Food and entertainment are the categories that you have the most control over. How much you pay on utilities, not so much. But food and entertainment are ones where you really want to know the current numbers. You really want to know how much you're spending and like during the month. So you want to keep track of that, and you want to have that updated regularly. So like if I go to the grocery store and I want to keep track of my food this month and check it against my budget, I will and just download right there at the grocery store how much I paid for food. So when we want to go out to dinner and I want to see where I am in this month's budget with my with our food category, then I'll say, hey, I don't think we should go here. Let's go here. Or maybe let's try to eat home tonight. It's not like it's going to break the bank, but it really is putting control in the areas where you can see some change. You can have fun with it too. You can make it a game. So I do suggest that even if you don't want to use Every Dollar as all of your categories, because it can be a little bit cumbersome to manage, you can just do the ones where you think there is some ability to control your spending. All right, this doesn't have to do with personal finances right now, but it doesn't matter what the topic of my webinar is. I get a lot of questions. I get over 500 questions each time, but I get these 3 questions all the time. So I thought I'm just going to dedicate some time in this webinar. Even though I do talk about it in other webinars, I just want to really have one slide per these 3 questions. The one question that I get the most, it's the number one question, is about estimated taxes. As you know, When you have your own business, and it doesn't matter how small it is, if you are accepting money in gross income if you have one counseling client, you are a business owner because you're accepting money in, and you are needing to pay taxes on that, not just income taxes either. As a business owner, now you are responsible for employer and employee payroll taxes. So what does that mean? That means when you are an employee of a company, your paycheck has payroll taxes taken out for Social Security and Medicare and other items, but the main ones for payroll taxes are Social Security and Medicare. As an employee, your employer also has money taken out based on your salary for Social Security and Medicare. So there's an employee and employer portion. Even if you only had one counseling client and made $100, you would still be assessed both the employee portion of 7.65%. There's some limitations, thresholds, but yes, mostly 7.65%. And also the employer portion, 7.65%. So that is 15.3% that you're paying right off the top on payroll taxes. So I'm figuring out how much your quarterly estimated tax payments are is a complex calculation. It's not just as simple as I'm putting it out here, but I just want to give people a bit of information about estimated taxes, because I usually in these webinars, start saying, hey, to avoid an underpayment penalty, you have to pay 110%, sometimes 100% of last year's taxes. That gets a little convoluted. So I'm going to give you a very basic formula. So you take your net income that you've made. So there are 4 estimated tax payments that are required during the year: April 15th, June 15th, September 15th, and January 15th of the next year. So let's just take that first April 15th payment. So you will calculate your net income, which is your gross income that you've made from counseling minus your business expenses. And you're going to start from January to March. And you're going to take that figure and you're going to multiply that by 15.3% or 0.153. That's your payroll taxes figure. Then you multiply your business net income by your personal income tax rate. So when you file your personal taxes for the year, you can go back to last year's taxes and see how much your effective rate was. So you would take you can either, if you do TurboTax, it says it right there on your rate, or if you have a CPA preparing your taxes. Well, first of all, if you have a CPA preparing your taxes, they've probably already done your estimated taxes, so you don't even need to worry about it. But if not, then you can just calculate your basic income tax rate that you're paying. Let's just say you're paying 20%. That is the income tax portion that you would pay. So you multiply that, your net income, business net income, by your 20%. Let's just say that's your income tax rate. Now I'm going to go over retirement plans in a minute, but if you have a retirement plan, this calculation will be very much overestimated. So add the two figures together, and that is your IRS estimated taxes. You should also deduct previous quarter's payments. So that doesn't make sense. You can ask me a question about that. But again, I'm trying to make it simple. It's not a simple calculation. It's even more difficult to explain it. But don't forget that you also have to do the same thing, A through C, if you have live in a state or you practice in a state, because multiple states, you might have licenses in multiple states. You have to do the same for state taxes and estimated payments. So the calculation for estimated tax payments is definitely not as simplified as I just described. But again, if you do your own taxes, the program should be able to tell you what your tax rate is. And you can also program in there in TurboTax what your net income is for the next year for your business, or what you estimate it to be, and it will calculate your estimated taxes for you. So let's see what else. Okay, just to pay your estimated taxes with the IRS, go to irs.gov and click the Pay tab. Many people have asked me, how do I even make this payment? if you don't have the vouchers. Since you're making estimated payments on your personal returns, make sure that you're using yours or your spouse's social security number and not your tax ID number, because remember, as a sole proprietorship, you are paying through your personal tax return. Please, please, please do not make any estimated tax payments through a debit or credit card, because those fees are very high to do so. If you're an S Corp, you really need a CPA preparing your returns and your taxes, both your annual taxes, tax returns, but also your estimated taxes. Okay, so it's a deal breaker for me in terms of have to have a CPA if you're an S Corp. So that is the number one question I get. I also wanted to include that I am a big, obviously you know me, and I'm going to talk a lot about QuickBooks. I love QuickBooks, but I love QuickBooks Simple Start for most therapists. There are many people who use QuickBooks Self-Employed, and that's totally fine. The only reason I'm not a big self-employed person with QuickBooks is because it does not allow me to do a balance sheet, and it doesn't allow me to reconcile my bank accounts. And those are two big things that I really think are important. However, QuickBooks Self-Employed is the only QuickBooks product that will calculate your estimated tax payments for you. But this little blurb here on this slide is from QuickBooks Self-Employed. I have an account with them just so I can teach people. And remember that you are paying on estimated taxes on all of your income that is not employee income, because you already have those withholdings already taken out. So if you have any royalties or interest or unemployment and rental income, it uses all of that in your calculation. And also, what I just did on that little simplified version of figuring your estimated taxes is not actually how you're supposed to do it. You're supposed to annualize your net income and divide by 4 to get your quarterly payment. But again, I just wanted to try and make it a little bit simplified. All right, the second most commonly asked question is the next slide, but this is my third most commonly asked question, but this is number 2. All right, there is a difference between what I charge and what my standard billing rate is. How do I deduct the difference between what my standard billing rate is and what I've received? And the answer is in no way or form. I don't care what scenario you present to me, you cannot deduct income that you have not received. So you're only paying taxes on the money that you bring into your business. So therefore, you get 0 deduction for the amount you did not bring into the business, no matter if it was due to sliding scale, insurance write-off, non-payment of bills. If a counseling client didn't pay their bill, you do not get to write off that amount. And that is because, for the most part, for every therapist in their private practice that is a cash basis taxpayer, you are only paying taxes on the money that's come in. So you wouldn't be able to get a discount for the money that you hoped had come in because there was a difference in your billing rate or what have you. You don't get any deduction for that. So I hope that clarifies it. All right. The second most common question, which is number 3 here, is should I become a sole proprietorship or an LLC? Should I become an S Corp or an LLC? I'm so sorry. Being an LLC, a limited liability company, offers you some protection from litigation from your personal assets. But an LLC is a legal consideration. So you do that for legal purposes. It still doesn't tell us how you're filing your taxes. So you can still file your LLC through your personal tax return, and that would be through your Schedule C, just like a sole proprietorship would be doing, but you're considered then a single member LLC filing through your personal tax return. Now, becoming an S corporation, yes, it does have the potential to save you in payroll taxes. Payroll taxes. Not income taxes, but you can save in payroll taxes. But do you want to be paying less into retirement? If you are saving on payroll taxes, that means you're taking a lower salary than you would if you, well, you don't take a salary as a sole proprietorship, but you're taking a lower salary where you're having Social Security and Medicare taken out on a lower figure than if you were a sole proprietorship. But does that make sense for you? Do you want to be paying less into retirement? Is that a financial plan for you? And what many people do not talk about is the downsides of mismanaging your S Corp. One of the main being that you have to be paying yourself a salary. And many people who have S Corps do not understand what that is. The IRS says that you have to be paying yourself a reasonable salary. Again, many people do not understand what that is. I find CPAs, in my opinion, there are many CPAs who, in my opinion, are misguiding people into taking too low of a salary in order to save on payroll taxes. Just my opinion. But really know what you're doing and really know that you have to have a CPA involved if you are an S corporation. If it seems too good to be true, take a second look at it, okay? Because I can't tell you how many people have just signed up, not necessarily just therapists, but in general, people have signed up for an S Corp but do not know how to manage it. Okay, now we're getting to your questions, so I'm going to go fast. What are some indicators that I'm ready to start drawing a salary when starting a solo private practice? If you are saving 40% for taxes and retirement, another 10 to 20% is retained earnings in your practice, you can start taking a salary. Now, we're calling it a salary, and that's fine, but what it really is its owner's draw, right? As a sole proprietorship, you are unless you're an S Corp, you are not taking a salary, you're taking an owner's draw. But I don't want you taking out that money as without figuring out first saving for taxes and retaining money in your business. What are some options for saving for retirement as a solo practitioner PLLC? I'm giving you the IRS website there because there are a number of different plans and they can be pretty confusing. But you do get to have a retirement plan from your private practice, but there are a lot of different options. However, it comes down to a basic question of, do you want to be saving in taxes now? And then when you retire and start receiving distributions, you pay taxes on those monies. Or do you want to postpone the tax benefits now and get the tax savings when you receive the retirement distributions? I have another slide here that I think will be helpful. This is the IRS guideline on how you get to, depending on your plan, you can maximize what they call a salary deferral. So you can save, right there it says, it's kind of fine print, but it says $22,500 for 401k or 403b plans, or $15,500 for simple plans. Again, there are lots of different retirement plans. If you are over age 50, there's a catch-up for those over age 50 because you're getting closer to retirement, and that's $7,500 for 401k or 403b plans, and $3,500 for simple plans. So in other words, for 2023, if you are over 50 and you have a solo 401k plan like I do and like I am over 50, I can save $30,000 this year for retirement. And that comes straight off of my business income to save me from income taxes. It doesn't save me from payroll taxes, but just for ease of numbers, let's just say that my business made $100,000 this year. I could take 30,000 of that and put it straight to retirement, and I would pay income taxes on 70,000. However, I would still pay 15.3% of payroll taxes on that 100,000. Okay, so it's significant savings that $30,000 you can just put all aside. Now, when I'm talking about saving for your retirement plan, I am talking about 40% for taxes and retirement. But if you are not relying to a great extent on your personal budget for your private practice net income, if you have some flexibility, what would be awesome is if in the beginning of the year, you just waited to take any owner's draw, if you can, if that's how you're set up, where you could just put 30,000 of your net income until you make beyond 30,000. If you could just put all of that towards retirement, you can just save that. And then you can start taking owner's draw. But of course, that's really tough if the more dependent your private practice, your personal finances are on your private practice, and the more that's full-time employment for you. So how do I keep track of business expenses? Should I use a business credit card or just a business checking account? I love this question because in my opinion, most people without an accounting software program do not keep track of their business expenses. So only having a business checking and a business savings account and not a credit card guarantees that you are not spending when you don't have the money. So you're spending when you have the money and not beforehand if you don't have a business credit card. I'd really like to encourage you to not have a business credit card. So we want to set up your business for success, and that is one great rule to have in place. Okay, so what are some personal and professional budgeting tips? Don't strap your practice, especially at the beginning. And what that means is no business debt. Don't commit to rent unless the numbers are there, and keep other employment until the business numbers are consistent. Pay savings accounts for taxes, retirement, retainings in the business first in your business. That should be my number one tip. So live within your means, track monthly at the very least. Like I said, in some of those areas where you really do have more control, like with food and entertainment, track it more regularly than monthly. Evaluate the budget before making a purchase. Save towards 3 to 6 months of expenses. That's a great tip for both personal and professional, in your business and personally. Okay, what's the easiest way to budget when income is not consistent? The easiest way, and there are lots of, you can go online and search for a lot of different ways to do this, but the best, most conservative way is to set up your budget based on your lowest monthly income estimate. So let's just take your lowest month. That might be the month that maybe summer is particularly slow because you see families or you see kids where there's a lot of vacations, and or you're dependent on the school calendar to see clients. And so summer might be your slowest months. It might be December or some of the vacation months that you take or that your clients consistently take. So find your lowest monthly income and use that as your budget. Set your owner's draw. Your owner's draw needs to be lower on those months of bringing in less cash. I have a slide about paying yourself owner's draw and how do you know how much. So adjust next month's budget based on your new numbers. There are many different budgeting tools that you can use, and I have those listed there. Adjust your expenses accordingly. For example, on those lower income months, adjust your personal spending with categories in your control. Get creative. Do you need to be traveling for continuing education, or can you do more online? On the months where income has been more than anticipated, retain more in your business for those rainy day months. And if insurance companies take longer to pay you, those estimates will help with your future monthly income estimates. So if you saw several clients with a particular insurance this month, but they typically don't, the insurance company typically doesn't pay until 3 months from now. Well, some pretty solid numbers 3 months from now on that budget. You know that money's going to come in there. So actually, the longer delay is might be even more helpful to you for your budget. Not helpful cash flow wise, but you will know when some money is anticipated to come in. So that's a plus. Make sure you are doing everything possible to submit all billing on time to prevent further delays. Particularly if you take insurance, you want to make sure you're not the bottleneck of the reason why it's taking even longer for insurance companies to pay you. So make sure your documentation and everything is stellar so that you don't have further delays, and timely. What percentages of your income from private practice should go into your business savings, personal savings, and other essential accounts? So again, just net income you definitely want to take 40% off the top for taxes and retirement. So you have to be able to be current with your numbers in order to know what last month's earnings were to take 40%. And putting that into a separate account, a business savings account, is the best plan. And retain some money in your business, particularly for those slower months. Look at the percentages of your spending personally and in business. I really do love pie charts and graphs that show actually percentages of your spending in the different categories. Make sure you do not have a no surprises act of your own. April 15th should not be a day of rude awakenings, because you are putting that money aside and you're paying your estimated taxes. My mantra is know your numbers. How much time should I set aside in my schedule to work on finances in my solo practice? It feels like it's never enough, and I avoid it like the plague. I so feel your pain, and this is one of the reasons why I really am dedicated to wanting to work with therapists, because it is painful. I definitely get it, but I might not be able to convert you into the nerdy side where you think accounting is fun like I do. However, accounting is empowering. Learning your numbers is not as scary as you may think, and it actually is very empowering. I can't really tell you how much time to spend, but I do know that most people who, when they avoid doing something, it's usually because they don't know how to do it. So let's get you the tools to learning what you should be doing, and let's make sure that you are really setting aside the time that's best for you. I find most therapists leave their billing till the end of the week or the end of the day when they're tired and they just don't have the mental bandwidth to dedicate to what can really be confusing. So make sure you're getting the right help that you need, but also make sure that you're setting yourself up for success where you're doing little steps, even on a daily basis, that will help with the overall overwhelm of it. It just becomes too much. How do you know how much to pay yourself? So you have to evaluate that every month. You cannot set yourself a salary. I mean, you can have a goal of how much you want to make in the year, but you have to look at your numbers every single month to know if you've earned that much, if you can actually take that much. And you have to make sure you're calculating that with your business expenses as well. So how do I pay myself? So I also got these questions of, why do you have to pay yourself rather than transferring money to yourself as needed? Or is it better to give myself a paycheck or to just debit the account for purchases? Okay, please, if you take nothing else away from this, please do not debit your account for purchases. We want absolute separation of church and state. We do not want you paying any personal expenses out of your business account. So I don't actually care how you get the money as owners draw into your personal account, but it does depend on the timing of it. So if you have your business and personal accounts all with the same bank, no problem. Just transfer the money over into your personal account. That's no problem at all. It doesn't matter if you write yourself a check or if you actually transfer the money. I don't even care if you use PayPal. I don't care how you take the money out and put it into your personal. But what I do care is how you do it in terms of the timing. If you have done your numbers for the month before and you know what you have to put into savings, put that into savings first. If you know how much you're going to take out, take that out as all one lump sum. please do not take it out when you need it. Do not take out money from your business account as owner's draw. Oh my gosh, I'm negative in my personal account. I need to transfer money over. I mean, that's an emergency. But for the most part, we want to make sure this is a full-fledged business. And you, even though it's not a salary, it's an owner's draw, you can consider it like paying yourself once a month, twice a month, whatever you want to do, but make sure it is actually one lump sum that you're transferring into your personal accounts. Okay, where the most common mistakes you see new owners make. The number one mistake I see, new or not, is business owners making. The business owners make is constricting their businesses. You can make it worse because your decision making is constricted in your private practice. And you do that by quitting your full-time employment without consistent income streams in the practice, needing the practice to fund a large portion of the family or individual's personal budget, taking money out of the business without first saving for taxes, retirement, retained earnings. That's the big one. Not setting time limits on the sliding scale, or at the other extreme, having an unreasonable billing rate. Not being current with tracking numbers or billing, and trying to help everybody by not specializing your practice. All right. Whew. Hopefully I've left enough time for live questions. So if you are hungry for more, I do individual consultations. I'm also a QuickBook Pro advisor. I can actually be your mini CFO if you would like, where I can help you record and reconcile your business bank accounts for you. But if you are one that really likes to know how to do things yourself, I can help you set up your QuickBooks accounts, and I can train you how to do that. I am really pleased to say that I have a QuickBooks bootcamp that I'm offering in October. It is very hands-on, so you really want to make sure you're in that first camp. Like I talk about 2 camps of therapists, and that's where you really want to be really involved in your QuickBooks account, and you're doing it. And I'm going to teach you how to do it. I also do personal money coaching, and this is my website and my contact information. Whew. All right, Ruth and Cheyenne, I'm ready for you. Live questions.
We are ready too. Let's see. The first question we have is from Zachary. Is there a reason not to use my personal Quicken to also track my business accounts? Solo practitioner. I'm hesitant to pay for QuickBooks, and it feels like overkill for what I need. I do have a local CPA that I work with.
Excellent. Great question, Zachary. I don't necessarily... If you use Quicken for your business, I'd rather you use Quicken for your business than no system at all. No problem. But Quicken is not set up for a business account, so you're going to have to really create a lot of business categories, which is also not a big deal. I would highly suggest that you have Quicken for your personal that is separate from Quicken for your business. So just have a dedicated Quicken account for your business. But the other thing, because it's not a business software program, accounting software program, it will also give you a kind of a wonky, you have to work with it balance sheet. But I do really want you to have a balance sheet as well. But yeah, I would much rather you using Quicken. And because you know Quicken, there's no learning curve with QuickBooks or anything like that. So yeah, it's not a problem. You just have to be creative with creating the business categories and the expense accounts, and making sure that you're actually getting your balance sheet prepared, because that's very important. But also super essential is have 2 separate accounts, because I don't want commingling of business and personal.
Thank you, Edie. Next one comes from Summer. If I see clients in multiple states, do I need to pay taxes in all the states?
Yes. So this is another common question that I get, but it's possible. It depends on what states you're working with. Some states, I think there are 9 that don't assess state taxes. It's complicated, and it's very difficult because you really do need to track where your income is coming in, also your expenses per state. So let's just deal with California, where I am. So you have to report all of your income worldwide with California. If I were, let's say I was licensed in another state, I would, and let's say I had to pay state taxes on that income as a non-resident tax preparer. I mean, I'm preparing a tax return as a non-resident, paying taxes on that income that I've earned in that state. I get a credit on California for those taxes. So you may have to file in multiple states, but you do not pay double the taxes on that income. But yes, that is, if you are licensed in multiple states, I highly suggest you get a CPA to do your tax returns. Or you could do it where you get multiple states on TurboTax, but again, those credits are going to be tough to kind of figure out. So I would have a CPA help you.
Okay, next question. This one comes from Tyler. I'm good on discretionary personal debt, but what about student loans, which most therapists will never make enough money to pay off at all?
Oh, it's a tough question. It really is. It's kind of, I would really encourage you to check out, even if you don't do Financial Peace University, I would encourage you to check out Dave Ramsey's website. He offers a ton of free tips and tricks, but it doesn't matter so much that you're a therapist, but a lot of people are dealing with massive student loans. It does matter as a therapist that maybe you might not be earning as much in your private practice as maybe, other people with other professions with potential for earning more salary, but you are in charge of your private practice. So it's not necessarily a given. I highly would question whether or not, let's go with the idea that you can make a lot of money and still have a thriving practice that you're serving the clientele that you want. So you can have a thriving private practice that will be able to pay off that student loan. So it's not a given that you're not ever going to be able to pay that off. It's possible that you may work with people where you have a lot in sliding scale, but we can kind of counteract that. The whole theme of what I'm talking about today is I really want therapists to be able to thrive in their private practice and not overserve at their own expense. And I see that happening all the time. So your debt plan would be true of any kind of student loan debt plan. It's tough, exceptionally tough, but it's very doable. And maybe we can talk about some ways of thriving in your private practice where you can pay it all off in your private practice. There are definitely ways.
Okay, next question. This one comes from Deb. If I file jointly with my husband for income tax and combine to pay, I am making some mistakes, ? Or am I making some mistakes?
No, you're not making any mistakes. If you have a private practice as a sole proprietorship, it's totally fine. You're filing joint. If you are doing like your own tax filing service like TurboTax or something, you're just filing your private practice as a Schedule C and assessed the payroll taxes right in your personal tax return. So no, you're not making mistakes in terms of married filing joint. That's exactly what you would be doing. You'd have a Schedule C, and then you put in down whatever estimated tax payments you're making. Just make sure when you're making estimated tax payments, again, for everybody, when you're making those payments and it's through your personal tax return, you're using your Social Security number to make those payments, not your tax ID number, because it's through your personal tax return. You can also use your husband's Social Security number if you're married filing joint. It's no difference.
Next question comes from Elizabeth. If you have a second job that withholds taxes using a W-4, will including additional voluntary withholding, if you're able to withhold enough additional, cover the self-employed taxes you would otherwise pay quarterly?
Yes, I was just going to actually add that in that last question. So if you or your spouse have a job where you are an employee or they are an employee, you always have the ability to be able to contact HR and increase your withholdings. This is if you're a sole proprietorship or an LLC, single member LLC, or well, actually, it applies everywhere. But anyway, if you're running everything through your personal tax return, you all and a spouse or you have any kind of employment situation where you're having withholdings. Yes, if your earnings are enough where you've computed how much your estimated tax payment needs to be, you can always go with your HR or payroll specialist and say, hey, up my withholdings for the last quarter, like increase them a certain amount every time. You want to make sure that you can't go negative, right? So if you're not making enough in that employment where your entire paycheck and more needs to be taken out for estimated tax payments, no, you can't. But anytime you're getting withholding, yes, just throw more money into that. Now, I will tell you that payroll companies need a lot of extra time. It's not just like right before the paycheck is cut that you can tell them, I need so much more put in there. So it is kind of easier to not have to deal with that. But yep, the IRS is happy to take your money either if withholdings or estimated tax payments.
Okay, our next question comes from Nikki. Is it important to have a business versus separate personal bank account?
So it's just important that you have a separate bank account for your business. Whether or not it's an actual business bank account is not important. In fact, when I keep talking about putting aside money for savings, I do like you to have a dedicated savings account. Many of you know Michael Michalowicz and Profit First, so he has you having a zillion accounts. I only suggest a few, but you'll know this concept if you're a profit first person. Say that 3 times. I do like you to have a separate savings account dedicated to your taxes, retirement, and your retained earnings. But if it's a business account or a personal account, it doesn't really matter to me. But there does need to be separation of church and state. So you do not mix any personal expenses in your business accounts. Hope that answered it.
Yep. And I think we're just about at time. So thank you everyone so much for submitting the questions. Thank you, Edie. I know there were a ton of questions. I just wanted to highlight a couple things while we wrap up over here. First off, everyone will be receiving the webinar recording. I know there was a couple of people asking that. We always upload the webinars also to our YouTube channel. So if you just go to youtube.com/SimplePractice, this webinar will be up tomorrow, along with all of our others that we've done with Edie. And then we have our next webinar with Edie, which is a month from now. We're going to be going through, or Edie is going to be going through, the psychology of money. So that's going to be September 28th. And so just keep an eye out in your inbox for an invite there. Also subscribe for Pollen. You'll be sent all of our webinar invitations and then any of our new latest blog articles and resources. And just to round everything out, thank you so much, Edie. This has been such a great webinar. The chat, I mean, I wish we got a chance to get to all the questions. We have so many more questions, but it looks like a lot of people will be